quite weak to think. Last week ended with a positive sentiment after that US inflation decreased and significant turn was seen in China's anti-corona policies. The US dollar fell under 107 mark, and now in the week ahead, while we do not have much important economic data to watch, the G20 meeting ahead should wait and see if this trend can continue or not. Let's review the most important data and events in the week ahead with me, Ahura, and FC Markets. Number 1. G20 meeting. The 17 G20 Head of States and Government Summit will take place on November 15-16 in Indonesia for 2 days. Under the theme, Recover Together, Recover Stronger, the G20 leaders will have a very busy 2 days, especially with increasing tensions between Russia and Ukraine and revolution in Iran. This meeting will be held on Bali Island, and its main topics are global health architecture, digital transformation, and sustainable energy transitions. Number 2. Japan GDP. After 3.5% annual GDP growth in the second quarter, for the third quarter we are waiting to see slower economic growth as confidence surveys such as the purchasing manager indexes have softened, and both consumer and investment spending registered decrease in the third quarter compared with the second. The overall estimate is a 0.3% growth in the quarter, which will increase the annual GDP by only 1.1%. As this data would not change the BOJ policies, it can increase the pressures on the Japanese yen against its crosses. Number 3. China retail sales, employment, and industrial productions. Recently, weakness seen in the Chinese economy ended with some changes in China's zero-COVID policies. While the global economy also is under pressure, which will decrease the demand on both manufacturing and service PMIs fell under the 50 expansion level, it's expected to see some softness in October economic activities in China as well. Retail sales are expected to decrease to 0.7% growth. Industrial output is expected to grow just 5.2%, and unemployment is expected to stay unchanged at 5.5%. These numbers mean more weakness for Chinese yuan. Number 4. UK inflation. Unlike the US, inflation is not peaked in the UK yet. We expect consumer inflation in October to increase by 1.7%, which can bring the annual rate to 10.6%, up from 10.1% in September. BOE expects that inflation to start decreasing in quarter 1st 2023. Last week's GDP numbers confirmed the UK economic recession, and with these BOE inflation expectations, we can guess less hawkish measures to start from 2023 by UK Central Bank. With these conditions, FTSE still can be under pressure. Number 5. US retail sales. With the gradual reduction of inflation in the past months, we do expect real retail sales to grow in October by 0.9%. In short, consumers continue to spend despite elevated inflation. By getting closer to the New Year holidays, it's expected that retail sales to grow in the next months as well. With increasing sales, factory orders also must increase, and it can support the economy and the US stock markets. Finally, number 6 is housing starts and existing home sales. With increasing mortgage costs, both housing starts and home sales have been under pressure in the recent months. Starts plummeted 8.1% in September to 1.439 million units. Existing home sales have also declined for 8 months, falling to 4.71 million units in September. While mortgage costs are still high, we are expecting to see lower numbers for both housing starts and home sales, which can increase the pressure on the US dollars at least in the short term. Thanks for watching this video, and hope it's going to be an amazing week for all of you guys.